to Waterford Property Watch. I am delighted to be here today with my guest, David Devine from Platinum Financial Planning. Welcome, Dave.
Thank you, Regina. It's a pleasure to be here.
So this is our first show after the summer, and it's great to be back. And there's been loads of changes, and now Stephen's telling me to move over to this camera. So there's been a lot of changes in the market over the last few months, some really interesting data. So I'm just going to run through that with you. I have my phone here in case anybody has any questions for Dave, my guest, on getting a mortgage. I will talk to Dave then about mortgages after I've spoken about the market. So in terms of where things are at, right now there are 755 properties for sale in all of the city and county. That's pretty much on par with what's been on the market for the last 6 months. It is taking from the time properties are being listed and advertised to the time that the sale is actually being recorded as sold is 209,000, and that's like still way too long, but it's marginally better than it was. It's just over 11%. It's the number of days is actually dropped by 11% in the last month, which I suppose is a mild improvement. Really interesting data here, and it's all information given by the Irish Property Price Index, so the information is really credible. All of this data is coming from every property that's advertised on each portal, and then all of the data recorded on the Property Price Index, and it's showing that the average price in Waterford City and County for a property is 186,000. That is almost 20% less than the last month. So in other words, prices have dropped by 20% in the last month. Also, in terms of the last 6 months, the numbers are even refreshed from the data showing on the screen. Prices are down on average 18.3% and 20% in the last month. So needless to say, that's very good news for buyers and not such good news for sellers, but it's showing that I suppose the market has stabilised. In terms of where the changes in prices are happening, I have a few too many pages here on my lap. The main thing is, I suppose the main discount in prices we're seeing is in one beds. So in terms of properties advertised and the price that they actually sold for, there is a difference of 19.5%. So one beds, for the price they're advertised and the price they're sold, there is a difference of the bones of 20%. That's very significant. So last month the average price for a one bed was 76,000. I'm not going to go through all the properties, but the other big percentages in 4 bedrooms. So 4-bedroom houses in Waterford City and County are down 12% in the last month. That they're down 12% on the advertised price. Okay, this is the advertised price. So it's just showing that there is a change, and more or less we're seeing 10% in the other categories, 2 and 3 bedrooms in or around. So from the price they're advertised to the price they actually sell from the property price register. In terms of the rental market, it says there's 111 properties in all the city and county. We're seeing an extraordinary small supply of stock here in Waterford. We may have 4 to 6 properties advertised at any given time, which is very poor. And there seems to be an enormous demand, and I would consider it to be quite worrying where our rental market is at. In terms of rental price, the average rental price is €1,000. That's across the board, and I suppose tenants can get some comfort now because of the rent pressure zone now being brought into Waterford. Now it's not all of Waterford, it doesn't go across to the county, it is Waterford City and not all of the city, but mainly the Dunmore Road. So I just want to see Stephen Stokes is watching. That's good because Stephen is filming. If you have any questions, feel free to ask. Now, I'm going to move on to mortgages. So Dave, you are very welcome.
Thank you, Regina.
Now, I'm going to ask you some questions, and if you think there's anything that you need to tell everybody, and I haven't asked, will you make sure?
Absolutely.
Thank you. So, would you please give some tips to whoever's watching as to what do you need to have and get ready to get a mortgage, please?
Well, I suppose the starting point for any mortgage application is preparation.
Yeah.
You're going to need to prepare well in advance. Like, it requires you keeping your current accounts really clean, no direct debit bouncing, no overdraft facility if you can get away with it, short-term loans, anything like that. Anything that raises a red flag for an underwriter.
Okay. And is there anything that you're seeing people doing that are a really big worry?
Oh, there's lots of things going on out there. Obviously, one of the big no-nos and certainly one of the big red flags is gambling accounts on anybody's bank statements.
Yeah, okay. Even a small little flutter.
It doesn't matter. I think the notion behind it is because there's no set limit on what you can actually spend, they don't know what damage you could possibly do with your account. So they'd rather not see them there in the first place.
Okay.
So if you're preparing and you do have them and you know you're going to be looking for a mortgage in the next 6 or 12 months, get rid of it.
We were chatting before we came on here, Dave, and you mentioned social media accounts.
Yeah, it's something that we found quite unusual this year, particularly with a couple of applications that have gone in with clients, where the underwriters and the lenders are actually looking at your social media.
Really?
Absolutely, yeah, as another form of review, essentially.
And what kind of stuff are they looking at?
It's hard to say. Like it could be excessive living, mad spending, who knows?
Okay.
Having holidays on yachts every 2 or 3 weeks, you know,
Okay.
that kind of raises a red flag.
Okay, yeah.
Just give you one story, for example, that really highlighted the use of social media as a review tool for us was a particular client came in looking for a mortgage, had been living abroad for a number of years, came in on the premise that he was going to be a first-time buyer and he had no other property interests and he wasn't married and had no children. Yet our underwriters could come back and say, well, he obviously has children and a wife because there's 2 very young children on his Facebook account and it says he's married.
Okay, so obviously they need to trust the borrower.
It's a trust, yeah, it's a trust thing.
And
so
your integrity is important.
Oh, completely, yeah. And if you think there's anything there at all, irrespective of how trivial you might find it, disable the account.
Okay.
Make sure your settings are set to private. Don't let them access your account in the first place.
Okay, that's really good advice.
I think that's a good tip across the board for everybody with the social media. Get your privacy settings right.
That's absolutely, and even if you're going for a job, because as an employer, I'm sure you'd be the same. Would always check some social media. Yeah. Okay, that's for another time. In terms of, you often hear about introductory offers. Are they a good thing for mortgages? And do you know you get?
It depends. Like, most of them are another sales tactic to get you in the door of a particular institution.
Okay.
Now we deal with all the institutions across the board, so they're not really the primary thing that we look at is the introductory rates.
Okay.
Like everything, you gotta factor in the fact that if they're giving you something, it's going to cost you in the long run.
So if it's too good to be true?
If it's too good to do, it probably is. Like, just for example, even just some of the cashback deals, that's going to be added on, and you're going to be paying a higher interest rate. You could be paying anywhere between 10 and 30,000 over the life of a mortgage, in addition for that extra 2 or 3,000 at the start.
No such thing as free money?
Absolutely not.
Okay. And of course, conversation about having a mortgage broker or going to the bank. Obviously, you're a broker, but
we're slightly biased in this market,
But what's the difference?
The difference is, I suppose, there are specific mortgage brokers, or there are financial advisors out there that have mortgage agencies. We happen to be the latter. We don't look at just the mortgage piece. We have to look at everything, the holistic element of the client's financial situation. You know, that
we have some comments coming in there. If you want to have a look,
okay,
Regina. Yeah.
Great. Hi Darren, how are you? Johnny Walker. If you've any questions, we'd be delighted. Will Brexit have an effect on the mortgage rates, do you think, Dave?
Don't know is the honest answer. I don't have a crystal ball. What it is affecting is the house price building cost.
Okay, how's that?
I think that's going to affect the long run in terms of actually people building more houses.
Oh, yeah.
And you alluded to it earlier on, the stock is very low.
Yeah.
Mortgage approvals are not a problem. You probably see from one of the statistics there's Stephen will pop up. There's been a lot of mortgage approvals. Like in the last 12 months, we've got about 50,000 approvals across the line in Ireland, across the various institutions. And we're seeing a rise. There's been a 35% increase on first-time buyers getting approvals.
That's really positive news,
It's very
isn't
positive,
it?
yeah. With the house prices dropping a bit, I know it's not good for the property sellers
I
and
know,
so on.
but I suppose the market has to stabilise.
As a buyer, it's a fantastic situation to be in, particularly with the central bank caps
Okay.
on incomes.
So talk to me about that. So a single person in Waterford, so thinking of buying, how much do they need to be earning?
Yeah, well, if
Or
you
couple.
we do the comparison, like Dublin, for you to afford a house in Dublin, you need to have a combined salary, gross salary of about 115,000.
Okay.
Whereas for the same type of property in Waterford, a gross combined salary of 47,000 will get you the mortgage.
So under 50,000 combined salary
Yeah.
will get you a property within the average property price of 186,000.
I don't think there should be a problem for most first-time buyers in Ireland that are in employment.
Yeah,
down here.
186,000. So that makes it very affordable, doesn't it?
Oh, completely, yeah.
So in terms of Dublin now, Wicklow, we were chatting earlier, so the same couple living in Waterford have to be earning 47,000 combined,
Yeah.
assuming they have a clean kind of credit history and have got loads of debt.
Yeah.
Same couple moved to Dublin.
Need 115,000 as minimum.
Wow.
And anywhere between Dublin and the Wicklow borders, it climbs down to about 88 or 89,000.
So it's really
You really
interesting.
got to earn double to live up in Wicklow or Dublin.
Wow. How much did you say you have to be earning in Dublin to afford?
115 is the guide for salaries.
115,000. Interesting. Crystal Valley Tech ran an event here in Waterford in July, and shout out for Elaine Fennelly. And just a lot of the people who came to the event were engineers looking and inquiring about work in Waterford, because various companies within Crystal Valley Tech have fantastic jobs, and the price of property in Waterford is really affordable, and it's a great place to live.
Absolutely, yeah.
Right, sunny southeast.
Well, your euro goes a lot further down here.
Yeah, it does. The euro goes a lot further. So for 47 to buy anything,
You can buy your average 3-bedroom semi-D.
in Dublin, yeah. So it makes complete sense, doesn't it, from
Absolutely,
a financial perspective, and no pressure, and obviously the commute.
And the excitement that's going on around Waterford at the moment. So
Yeah,
it's good to see it.
Absolutely. So I have some more questions for you, Dave. So they are giving out mortgages. So there's 35% increase in mortgages for first-time buyers.
We've seen that from July last year to July this year. There's been a 35 increase in approvals on first-time buyers.
That's brilliant. That's really good. Oh yes. Now, when somebody gets a mortgage approval, okay, are they home and hosed, as they say? They get the approval. Happy days.
That's an interesting.
Or have you any advice on that?
Yeah, we try to advise all clients. This is not the end of it. This is just the starting point. You've got the approval.
Yeah.
The banker basically give you a letter to say we're happy to go ahead with you, but you need to fulfil X, Y, Z criteria.
Okay.
Valuations have to stack up, all the other bits and pieces. So this is the key period. Like,
Okay.
from the time you get your approval to the time the solicitors and everybody do their work, you could be anywhere between 4 weeks to 4 months to draw down.
Okay.
So this is the time to be very careful and not do anything stupid with your accounts.
Okay.
Don't put Paddy Power back on again and go for
Okay.
go for a
So
bad weekend
basically, absolute clean.
somewhere. keep it as clean as you possibly can, because as a criteria what we find in most cases, all documentation will have to be up to date and certified before drawdown is done.
Okay.
So if that period is 3 or 4 months of a lapse,
Okay.
they're going to be looking for credit card statements, bank statements, and so
So
on.
you make sure you wait till you've had the keys
Yeah.
in your hand
Until
to
the
go
keys
and
are
buy
in
your
your
new
hand,
car
do
and
it.
buy the furniture.
Absolutely.
Don't spend a penny on your on
we
your
want to
account.
see you as a pauper for that period.
Okay, that's really good advice. And just out of interest, somebody's worried about their credit rating, and let's just say they made a few blips and they've kind of sorted things out, and they're worried that they may never be able to get a mortgage.
Yeah, look, everybody I think in Ireland at this stage can say that they probably have something on their credit history,
Yeah.
however small or minor it may be. It's not the end of the world.
Okay.
If we can get a story behind it and we can portray that story for you to the lenders,
Okay.
we can certainly have a go at it. They're not all the same. There are people that will look at impaired history like that. And worst case scenario, we have partners of ours that we can work with that can help you clean up your credit history.
So you should really go to an independent mortgage advisor if you're worried about your financial position. Get the advice, get ready, and then maybe prepare.
Absolutely. Look, the difference between independent advisors and particularly banks, when you go in, you're dealing with somebody behind the counter who's there specifically to do the job for the mortgage.
Okay.
we take you on as a client. We got to look after you. We got to find out what your story is,
Okay.
figure out how we can portray that to the lender. So it's
Okay.
a relationship we're building with you to get you across the line.
And the other thing is then in terms of you get the best rates, I assume, do you?
The best
The
rates are
terms
available, yeah.
that are available. And like for somebody getting a mortgage, it's all new and this is your business, you know it and you understand it really well.
Yeah.
Like, will you hold their hand throughout the process
Absolutely,
and
yeah.
remind them to get stuff done, and I suppose a little bit of babysitting?
Completely, yeah. Well, we have a team of guys in there that are on this all
Okay.
the time, and they will assign a particular individual to you at any one point, and they will look after you for the process.
And that's if you deal with a good independent mortgage broker, that's
Absolutely,
the
yeah.
service that you should expect. Great. Yeah, it's I think it takes some of the stress out of it dealing with a broker.
Look, it's probably the single most largest transaction you will ever do in your life. So you got to
Yeah.
make sure you do it right.
Yes. Have you any other tips, Dave, in terms of getting mortgage approval, or anything you think is important to tell people watching?
Other than the protection piece, and this is something
Oh, yes.
people don't really budget for when they're looking at it. It's important. Like life insurance is an integral part of your drawdown in the first place. You need to have mortgage protection.
Yes.
That's a requirement of the bank,
yes.
as always, or any lender institution for that
So
case.
it means
covers their interest in
that
it.
if the main person earning the money in the household was to die,
Yeah, the bank get the money for the purchase of the house, and you get to keep the house.
yeah,
So you're not out on the street.
Yeah.
Now, that's a criterion. That's a minimum criteria.
Yeah.
When you're talking to your advisor, you need to start looking at all the other options. Factor for serious illness cover or some type of illness cover.
if you can't work.
If you can't work, yeah.
Why does the
Ideally,
mortgage
if-
protection cover you for?
Mortgage protection purely is just for death. And that's for the bank's interest. You know, you got to think to yourself, outside of the bank's interest in this mortgage, what else have I got to worry about? If I'm sick or I have a major illness, how am I going to pay for the mortgage if I can't work? You know, everybody.
They're
I'm sure
uncomfortable
that-
conversations, but they're
Absolutely.
ones that need to be
There are
had.
hundreds of people
Yeah,
out there, I'm sure,
yeah,
paying
yeah.
for gadget insurance, and the one
Yeah.
thing that they don't insure is their own income.
Okay.
We have a big question from Jim Griffin.
Yes,
Have a look there.
yes, Jim. Once your mortgage is approved, if the builder on your house can provide an extra, i.e. the attic ready for conversion or similar, that would have cost savings now, then save down the line for say 2,000 or less, can it be added onto the mortgage, or it has to be funded privately? So I probably didn't read that out great. Okay, you have your mortgage approved, and then the builder can provide an attic conversion or something similar. So if there's an extra 2,000 on that, can you go back to
Can
your
it be gone
lender?
back? Yes, there is flexibility.
Okay.
It's not a case I've come across specifically. We have had mortgages change from one property to another because of various different things. It can be done. There is flexibility there. It's on a case by case basis, though.
Yeah, and look, if you don't ask, you don't get.
Correct.
And
We'll always ask.
Well, like in terms of adding value to the property, you know, borrowing from the bank, you get a valuation for the property.
Yeah.
I suspect maybe
Well,
a
assuming
revised
that the property is
valuation, and
worth
that the estate agent who's providing it for the bank that does a valuation, they could, I'm sure, increase the valuation of the
On
property
that
to
basis, the
reflect
loan to
that.
value ratio, you definitely
Yeah.
go back on a
Yeah,
flexibility
I
basis.
hope
yeah.
that helps, Jim. Okay, that's really good advice in terms of serious illness cover. And what if somebody was to lose their job? Is there other cover for that? No.
There was. I
Okay.
have yet to. At one stage there was, but I think there was a lot of mis-selling going around that.
Okay.
Like the
Okay. So it's really serious illness is the one.
It's a hard one to get a cover for. There was lots of it back in the market back
Okay.
in 07, 08 and 09.
Okay.
I've yet to see anybody who's actually made a successful claim on any of those policies.
Okay, so the key one that you're recommending today, if you do nothing else, make sure you have a serious illness policy.
At a minimum, you need to.
Okay.
Income protection will be the way to go as best bet.
Okay. Well, look, I can't believe 20 minutes have just flown, Dave.
No way.
Yeah. So we're going to get ready to say goodbye. I suppose in summary, thank you very much, Dave.
Thank you very much
If
for
you've
having
got, if somebody has got some questions and they want to ask your advice, can they contact
Yeah,
you?
by all means, we're on Facebook. You can send us a direct message through the page, or you can contact us on the phone number.
Okay, platinumfinancial.ie.
Yeah, we're happy to take inquiries anytime. Doesn't really
Okay,
matter.
and the first consultation's complimentary, is
Absolutely,
that right?
yeah. We have to see if we can help you before we can start.
Great. Okay, well, thank you very much, Dave. That's a wrap. We'll be back in another couple of weeks to talk all things property. And if you have any questions, I can get back to you later. Thank you very much for tuning in. And as we always say, up the data.